Hello everyone, friends. Mozart here. A brief market overview. After yesterday's dump subsequent pump. Yes, I won't dwell on the reasons. The fact that Trump eventually changed his mind. Suspended tariffs for 3 months for all countries that do not impose retaliatory tariffs against the USA. As for China, he, on the contrary, raised them, but said that we could reach an agreement. In short, the market has long wanted to bounce back, and it did. Let's get to the facts. I have a position, as you know, 77,500. Further down, the lower entry point is 71,100, which is still relevant. That's all. So this position, this one is already protected. Even if we go down now, I'll just be knocked out at break-even here. And either I'll buy here, or I'll buy earlier, manually. In this range, there will be one of two options here. However, what I see here, now, from the picture, at the moment, I won't talk about Trump right now. I don't know what he will say today, or tomorrow. I think many have realized that you can expect anything from him. Therefore, purely based on the picture, I like that we have 2 days with this kind of volume, which is 2 to 2.5 times higher than average. These are daily candles. Each of them bounced off the monthly S3. Each one. And yesterday's spread was very, very high. The spread was quite decent. Next, on the 4-hour chart. By the way, these were take profits on the short, which I also gave earlier. They all worked out, and quite well at that. They can be removed now. What do I like here? Well, I like the classic DD pattern here. 1, 2. I like it. A beautiful, classic DD pattern. I'll take the targets for this DD pattern at the minimum without any excessive expectations. Not much higher than the current levels, but higher. That is, approximately a return to the mark closer to $85,000. So, at the moment, this is an adequate minimum target. The likelihood of us reaching there is quite high, within the scope of this rebound. If we consider the maximum, with all this margin, the target is approximately $87,000, roughly. However, this target is only based on the reversal pattern, because there might still be room for the impulse, which could also go higher, closer to 90. So, for now, within this structure, I am expecting an upward movement. Therefore, I am not locking in any profit at the moment. And this is regarding the current situation, specifically. Furthermore, I also like that Bitcoin is rebounding from the annual moving average on the weekly chart. Moreover, on a daily basis, it's a good volume for a rebound. Exactly from the annual level. I like this as well. Plus, our stochastic is turning around. For the second time, it's showing a buy signal. And additionally, the RSI line held the 40th index. That's another plus. And it seems like the MACD is attempting to do the first rounding. But we'll see how this week closes. So, these factors, I objectively like right now. And with these factors, I am still inclined to wait for a rebound. Where is this rebound? I am waiting, and where I will be taking profit. Again, if this rebound continues according to my analysis, objectively, the zone I am waiting for is approximately here. This zone. The range, that is, it approximately starts from the marks there. 85, well, all right, 84,900, somewhere from there, and up to the marks of $90,000. That's where, adequately, on average, this is the R3, upper boundary of the internal pilot corridor, about 87,500. Here I am ready to withdraw part of the profit, or all of the profit, if here, the candle will close poorly. Why here? Because here are the targets for DD. Here we have retest, the yearly moving average, and in this case, the death cross, because this yellow 50-day moving average crossed the 200-day moving average on the 5th to 6th of April. This white moving average is already the death cross. And the price quite often tests this intersection again, after the crossing. Not what happened before, but after the crossing. This is what I'm waiting for now. And, in some best-case scenario, in the most optimistic, Outcome, I am waiting for a retest of the green hundredths moving average, which, well, I don't know where it will end up because it is currently decreasing. Possibly it will end up around 90,000. It is currently at 92. This is what I'm waiting for in the best case scenario. That's it. I won't extend this long any further. If, even right now, it rockets there, I don't see any point in going further. Beyond that, it's dangerous. So, just reasoning like this, I am ready to reopen if we consolidate where I mentioned in previous videos, just above this level approximately. This range. That is, above the marks of 93, for $5,000. Once we consolidate here, all is set. You can go long from the current levels and place a stop. Well, as things progress, I'll decide where to place it. But for now, that's it. For now, that's regarding Bitcoin, positions on Bitcoin, on altcoins. Total 3. The same thing. I like the reaction on altcoins. At S3, 2 green candles, volume, well, not as high as with Bitcoin, but it. Also, what does it represent? This volume, a bounce from S3, and an attempt to this 1, 2, 3 days of a false breakout of the annual moving average. We bought it back. Yesterday's candle bought it back. If at least. For the next few days, we, well, at the very least, stay here. And it would be better to continue growing. But even if we just remain in place, without moving away, back under S3, that is, roughly under the mark of $710 billion. If we don't go back here, that's very good. And then, here, with a high probability, total 3 will go to roughly here. For starters, $800 billion in an adequate scenario. And in the best scenario, it's 830 to, well, closer to $900 billion. Closer to there, you see, to take off these highs. This is in the very best scenario. On the 4-hour chart for total 3, the picture is, in principle, similar. In principle. Here too, there's a DD pattern. That has not yet fully played out. Its completion is approximately at the mark. Well, yes, as I said, this target is at least around $800 billion. Well, 790 to 800. Roughly like that. And if you took any coins for altcoins, we took coins for altcoins in the trading channel, meaning I plan to close them there. Either completely or for the most part. That's the situation. Total 3, on the weekly chart looks not as promising as Bitcoin. I also mentioned this in the previous video. Why? Because right now we are testing the annual moving average. From below upwards. From below upwards. So, and right now, there's a complicated situation here, strong resistance. And if the altcoin can break through the annual moving average and consolidate somewhere above this zone, meaning above the $740 billion zone, for at least 1 or 2 weeks following, well, then yes, we can expect a reversal and a test of at least this level, at most what I'm expecting, this range. There's a $1 trillion gap here. I've mentioned it repeatedly, but let's see. So, regarding altcoins, I can't say anything specific right now, as we're testing the annual moving average, but from below upwards. This is resistance, and it cannot be ignored. It's important. This is a less favorable situation than with Bitcoin, which is doing the same thing, only from top to bottom. That's all. I'll keep you updated. So, if you're following my lead, just keep an eye on the Telegram channel, where I'll definitely post when I close, which part 1 close, and what I'll do next. Thank you all. This was Mozart. Have a good day and goodbye to everyone.